Hi, this video is to help you get started with the Zoom simulation. So if you're a new student to the simulation, you'll have to click on register, and then you'll have a registration page. You click on student, you fill out the quick registration, create a username and password. Please, I would suggest write down the password or use a password you're familiar with. Check you're not a robot. It'll take you to the payment page. Here you'll enter in a credit card to pay for the simulation. Then 3 will be the class selection. This is where you pick your instructor and your class code to link your account to your class. And then the final step would be team selection, where here is where you join a team for the simulation. So pretty simple registration process. And then once you're registered, paid, and selected your class code, then you can create a team. Okay, so once you have your username and password, you can sign in, and you're presented with two options: play solo practice or play team competition. So the solo practice is just you against computer players to play the simulation, to get better at it, to hone your skills, to understand it better. And play team competition is when you have formed a team or been assigned to a team. Here you play along with your team against other teams in the class competing head to head in a competitive market. Okay, now the first step before you choose either of these is to download and view the student manual. So the student manual is something critical to review to get an idea of what the simulation is about, um, the process for getting started, how to design a vehicle, how to advertise a vehicle. What it gives you important factors about what the size of the market is, the how effective advertising is for each category. The different aspects of the game are all in this user guide that you should read over to update yourself about what the simulation is all about and the best way to play the simulation. Okay, so I'm going to click on play solo practice to give you an idea of the mechanics of the simulation. So in the solo practice, when you're starting in year 1, you only have 4 menu tabs to work with. And basically what you're making an automobile. It's an automobile company. So the first automobile I have to design is the economy class. So I have information here. These are the development options of designing a car, and this is the customer expectation range, what customers are expecting from the low to high end. That doesn't mean you have to stay in this box. You could do lower or higher, but every point that you pick has an effect on demand. So here, a fuel economy seems to be the most important of all the factors. So 25% of the buying decision is based on fuel economy. So maybe I want to exceed customer demand. Meanwhile, engine power is only 5% of the purchasing decision, so not a huge amount. So maybe I want to go even under the expectations to save some money. So here, for each of the categories, when you're designing the vehicle, you're trying to make the vehicle that will appeal to the customer as best as possible to generate as much demand. At the same time, you have to balance that with the sales price. Now here for the economy vehicle, the price of the car is an important factor. So you don't want to be the highest price car when you develop. Now, a general guideline is that in year 0, the management team left off with a profit margin of 40%. So if you have a profit margin of 40%, that means you should try and beat it this round. Okay, so I'm over 40%. And that's critical for each round. You want to improve your profit margin every round from round to round, because that's what real companies are expected to do, and that's what your investors want to maximize their wealth. Now, sales forecasting, this is where you want to turn back to the user guide. And in the user guide, there is a sales forecasting area that even gives you an average amount of cars sold per year. So this is what was sold in year 0, which was a different management team. You're taking over in year 1. This is the average sales. So if your car is better than average, you'll sell more. If it's not as good as the average car, you'll sell less. And each team competition has, a different aspects of who's making the better cars and who's making the worst cars, depending on the competition. So I'm just going to put in 2000 because I don't think my car is going to be the best car designed on the economy class. So then we move to sedans. Sedan's another popular car. So here again, I'm going to put in some characteristics, and then I'll put in a price, and I see them above the 40%, which is important for when you're starting out. And again, I'll check the user guide, and 2600 seems to be a good base. I'm going to do 2500. Don't think my car is as good. If I thought my car is better than most, I might put that up higher, but I think it's just an average, or it's a little bit below average, so I'm going to put a little lower amount. And remember, each year these expectations will change as that happens in the real world as well. So the third car I need to design is a truck. And again, I wouldn't suggest you copy the numbers I'm putting in here. I'm putting them in here pretty willy-nilly. But okay, and again, 1800, about 1800, 1700. So I'm going to just go again below average because I'm not really focusing too well on how to make the best vehicle here. So, and here's an interesting. It's only 5% importance factor on the price, meaning that low price is not a critical aspect for a luxury car. For example, if you're buying a luxury car, most people want to pay a higher price or a car that's a more expensive car in the luxury category because uh, that's a feeling you get what you pay for is sort of the feeling on the luxury side, I guess. Okay, so I'm going to submit the sales data. And now we move into the marketing section. So in the marketing section again, you need to look at the student user guide that's going to go over the importance factor of each of the different media that you can advertise in, and that has to translate into dollars based on an advertising industry budget. So what I see here is this is the expected range of what companies will spend in their advertising, and it's 15% of the sales factor in selling the vehicle. There's also an age targeting that you can change here, and this is more for the role-playing aspect of the simulation. So then in here you can, you know, figure out how much you want to spend per vehicle, and I'm just putting in an average, just putting in 100,000. I don't suggest you do this, but I'm just kind of, so for each vehicle, they have a different expectation range, and now I'm advertising greatly below the expectation range, so that means my demands will not be as high if people who are within or above the expectation range. So you can go below or above. So maybe on the truck, um, I will go above the range, and I'll do 1.8, where here is below, well below the range, and that's going to affect my demand on the sales of the vehicle. And what's also going to affect the demand is I'm just putting, say, if I'm putting 100,000 in each of these categories, the on the student user guide, we know that certain categories for the luxury brand, television is the most important, followed by direct mail. So if I was smart about playing, I would probably want to put more money in television and more money in direct mail because that's the more effective as far as things are sold. That's where it's saying it's the most effective. So each car class has a different group of effectiveness, and that should be a guide on how you advertise. Okay, now into production. I see it currently for the economy class. I have to set the production for each car. So for economy, I have one production plant that can make 1,000 cars. Now I'm forecasting 2,000 cars, so I need to buy a production plant, which now increases my capacity to 2,000. I'm going to pay 10,000 to do that. So now I'm going to set my production, and here's a hint. Production should always be set to make your excess or shortage zero. It should never generate You should never be generating an excess or a shortage. This is just really double check here to make sure that you realize your production is going to, with your inventory, is going to match your forecasts. Now, in the operational investments, here's some information about the operational investments, and it looks like if I invest in categories here, I can get an operational reduction. So for each category, there's a reduced cost that will be developed this year, and then the following year I would get a discount on manufacturing based on the investment I have made in technology, robotics, and software. And this is how car companies try to compete. They try to compete by investing in technology to improve their manufacturing costs, lower the manufacturing costs. Okay. So on the sedan class, I see I'm forecasting 2,500. I only have 1,000. One factory with a capacity of 1,000, so I need to buy 2 factories to move it up to 3. I wouldn't buy 4 factories because now I have so much capacity I'm not using. That's a waste of factories. You're buying a factory for it to do nothing. So I'm going to try to only buy as many factories as I need to make the cars I'm forecasting. And I'll get a couple operational investments here, and the same thing for truck. And I'll buy a couple. And then lastly, the luxury brands. I need to buy 1 manufacturing plant, set my production, and then I'll buy a couple of operational investments. All right. Last screen is the financing screen. So I'm able to ask for additional funds or retire funds that I've already acquired. And I'm just going to go down. This is last year's factual income statement, financial statements. This is next year. Pro forma means this is a guess of what the financial statements will be based on my sales forecast and my spending. This is not going to be a fact until it's run through the competition and we see what my actual sales results are. So this is what my estimated sales are. Doesn't mean that's going to be what the sales will be. If I've over produced cars and I don't develop the demand, my sales could be lower. They'll never be higher, but they could be lower. So that's the best case scenario. And then I see here that I have a cash deficit. So I don't want to really end the round with a cash deficit. And the cash deficit occurs by I must keep a minimum cash balance of 25 million. So if I don't have enough cash to meet this 25 million, it shows me that I have a deficit. I need to raise 13 million to get my cash up to this minimum 25 million. So I can go and get some additional funds here. I can ask for some short-term debt, some long-term debt, and you see the interest rate here? When I ask for more funds, this is going to increase the interest rate. And that's what happens in the real world. As the company borrows more, gets more riskier, you're going to have to pay higher interest rates. Now I can also issue some stock. So I could buy some additional, sell some additional stock, which will have an effect if you look at earnings per share and stock price here. So you see that $5.22 and $16 is my estimated stock price and earnings per share. But if I do issue more shares, my earnings per share will lower and my stock price will lower because now I have 60 million shares to divide by all my earnings per share variables. So this is a forecast. Doesn't mean it's going to be exactly true. This will only come true if I have the exact profits that are on the pro forma statement, which means I need to sell everything. Okay, so now I have a surplus, so I'm going to complete year 1. And this, in the practice game, it automatically throws me into year 2. In the team game, I have to wait until the instructor pushes the game to the next round, so I may complete the round, but then have to wait until everyone has been completed the round, and then it moves to the round 2. But in the individual practice, it moves directly to year 2. And after I complete all the screens for year 2 and finish year 2 at the bottom here, it will jump into year 3. So at any point, I want to reset the practice game back to round 1, I could click here. But I only want to click here if I'm willing to erase everything. So if I click here, it'll say you will delete your practice game and allow you to play the practice game again from the beginning. So I'll lose all my progress. So I don't want to do that. I only want to reset the practice game if I get to the end and then I want to try it again. So right now I'm in year 2. So year 2 is a little bit different. I can look at my overview score. And in the overview score, I have, this is the last year zero's management, different management. This is where everybody starts the same figures here. And this is what I've developed in year 1 with my decisions. So I was able to increase sales by 64%, and I got it roughly 64 points. Since I borrowed money, I increased my debt, I lost some points on the quick ratio, but the debt ratio improved because I was able to improve my profit position in relationship to debt. So my profit margins, I got my profit margins improved 22%, and my operational and net profit margins to improve, and that was good. My total asset turnover, I went down 3%, lost 3 points because I bought a lot of assets. I bought a lot of factories, a lot of operational investments, so that's understandable. Same with return on assets is actually did well in return on assets. And if you do well with profits and you manage your assets closely, you should do well in the return on equity, earnings per share, return on assets, market capitalization increased. I more than doubled my market capitalization, but the most points I can earn is 100 is the max points. I improved my forecasting, was more accurate than the year before, and I had invested in operations, which gave me 100 points. That's why it's important to invest in operational investments, because you get points for that. And I had a small surplus, so I made 889 points the first round. Now that's the rounds, the points you earn each round differ. So the first round is the easiest to make a lot of points because you're coming off of very bad management that was fired in year 0. So year 1 is typically pretty strong in most student games. Moving forward, the average score of around 300 is a little bit more common. So don't be disappointed if you score big in round 1 and then score a little bit less in round 2. The points aren't going to always be equal every round. Some rounds are a building phase and you sacrifice points as you build up your companies. And then other rounds you're reaping the rewards of what you invested in the company and you make more points. So don't get too hung up on how your points change round to round. You just want to be consistent and make your company as profitable as possible, and this will, in the end, long term, generate the most points for the simulation. So now in the assessment area, I can look to see, I can get a feedback, so I don't have to go to the instructor and say, what happened? How can I do better? I don't understand what happened. Explain everything to me. You don't have to do that. You go to assessment, you get a star score, so everybody understands stars. I only got 2 out of 5, so that wasn't that good. So I get my actual score, the percentile rank, so I only did better than 37% of the other players, and then my performance, which was low. So I can click this information button here to get feedback on how to improve this. So I see my stock price was above average, but I still might want to read these informational points to see how to improve. My profit margins were good. My total asset turnover was was average, and this could, again, I can read these as sort of a self-assessment of how to improve my simulation. Then I can go into charts, and I can see the charts for sales, marketing, the industry, and performance charts. One particular thing that's important on the performance charts at the bottom, you want to look at, this is the market potential versus actual, and you want to see that my market potential was 2,182 cars, but I only made 2,000 cars. So these 182 cars were given up here, and another team was possibly able to capture that since I wasn't able to meet the demand because my forecast was lower than the actual demand. But luxury here, my forecast was pretty close to my actual demand. So this is important to feedback to use in how effective you are in forecasting. Okay, then the industry page will show my practice game, how I did all my data sort of backed up here, and then I can look at the competitors. How did they build their cars? What were their cost reductions and their labor charges and their sales price and their gross profit, their market potential, and their financial information, how many points did they make? So for each player, you can investigate and see what they did differently than you to hopefully help you improve your game. So this is a research tab, and you have your financials are backed up. Now these are your actual financials, and notice my sales weren't as high as in the pro forma, because I didn't sell every car. I could see in production here. I had some on one of the vehicles. I had some leftover inventory, 65 cars here. Um, so I had some leftover inventory, which impacted. I didn't sell all the cars I forecasted, and that's why I have a different sales. And this could affect. This is why you might see a surplus in finance and then a deficit after the round is run. And what had happened is you didn't sell all the cars that you had forecasted. Okay, so these are your informational tabs to see how you're doing. Overview shows you how you're doing. Assessment helps you to understand how to do better. Industry and financial backs up data that you can research other teams and see what they did and how to improve the score. Then moving into sales, it starts all over again. So in year 2 now, I have my year 1 decisions here, so I know where I left off. And now I can work on year 2 decisions. And I notice that the customer expectations have increased in some categories slightly. So I'm going to have to go in and change my decisions here. So this last round, I believe this was at 30. Now it's at 31. So I might want to improve this a little bit. So I would put my new factors in. And if you do something that's not going to work, you're going to get an error. This is going to tell you that's not a good number, and you just have to re-enter the number. I'll increase my price, and I see that the price range is increased, but I see here that my gross profit didn't increase. So that's not a good thing. You always want your gross profit to increase. So here I got my gross profit up. That's the progress that companies are expected to make. They're always expected to increase their sales and increase their gross profit. So I'm going to increase my forecast. Okay, so that'd be an example of how you complete year 2 on the sales page, and then you move into your marketing. And again, you have the marketing range here, and then you have information of what you input last year. So you can change that for the next year if you want. Just moving back to sales, I finished inputting all the sales data for year 2, ending off here in my luxury. And again, if you see that your gross margin went down, that's usually not something investors are going to like. So I'd have to redesign the vehicle. I might have to, because I do have these operational cost reductions of 900, which is helping, but I might have to invest more heavily here because I am not really getting to the point that where I can increase my profit margin. All right, so now I got my profit margin up slightly. I usually try to shoot for between 3 to 5% increases in profit margins per round to keep my investors happy. Okay, again, moving into marketing, this marketing range here will change as the industry gets bigger and makes more money. This expectation range here will increase each round. So I should look to be increasing my marketing as the industry grows. So as the industry grows, and again, I'm just throwing numbers here, and don't copy these. This is not how you really should do it. You should focus on the areas that have more importance than lower importance. But what's important to remember that each of the car classes, the economy, sedan, truck, and luxury, are growing at double-digit percentages, with luxury growing the fastest at 35% per year. So that gives us a lot of room to make more money and increase our budgets for advertising. So that's why, as this is dynamic, as the industry starts to expand, you'll see these expectation range of what companies spend in advertising to expand along with the expanding industry. Now, so I'm just kind of just putting numbers in here just to fill this in for year 2. And okay. And you should generally, from year to year, you'll be spending more each year. Okay, so we're back in production, and I see here that I need to buy another production plant to make my 2500, and I want to increase my operational investments, because this is what's key to reducing my costs so I can maintain or improve my profit margins. If I don't make investments in my company, so I'm not going to have the ability to reduce the costs. Okay, because increasing prices customers will only allow so much of a price increase that it's not going to really make up for their extra expectations that I have to when I build the vehicles again. So here in truck, I don't have to buy a new manufacturing plant, so I can just um, use the two plants I have. In economy, same thing with economy. Now here's something interesting. I have inventory in economy. So when you have excess inventory, you are allowed to retrofit it and sell it again the next year as a new model. So I don't have to put in the full 2,000 to get to my zero here. But I'll buy some more operationals. I'll invest in hybrid technology, electric vehicles. Okay. Now, so now I'm in the finance page. So I'm going to scroll right down and see, okay, I have a nice surplus. So since I have a nice surplus, I can do a couple things. I think I'll go back to production and I'll buy some more operational investments in production, spend some money that way. And you'll see that after I buy those operational investments, my surplus has gone down some. And I'm going to buy back some stock. You'll see that my stock price and earnings per share will increase. So let me buy. Okay, so that helped my earnings per share and stock price. So I'll invest some money in there. Maybe I'll retire some funds. Okay, so I'll see that my surplus is still 17 million, and I see my sales are going up. So I'm going to stay with that. Complete year 2, and then it throws me directly into year 3. Again, this is only during the practice that you get automatic results coming back. And I see that in year 3 I made 500. In year 2, now I'm competing against myself. So this is my year 1 results are backed up here, and my year 2 results, and I see that I increased. I got my points to 500, which is very good for round 2. Because I can never, round 1 is usually where you earn the highest points, and it's hard to ever duplicate that because you're coming off such a terrible management. But now I'm competing against myself. I have to get my year-over-year change. I have to beat last year's results that I inputted, so it gets a little bit harder. So it's sort of like having an 4.0 average, and then how do you top that? You can only meet it. You can't really top that. So this is sort of like a B average, and I'm going to an A minus average. So I'm getting closer and closer to doing as best as I can. And then each of the categories, and what you notice here with forecast, I sold every vehicle. I met all my forecasts 100%, so I made no points. So here in forecast, I'm really not trying to make any points. I'm trying to prevent myself from losing points. So at this point, if I'm scoring 100% effectiveness in forecasting, I could only lose points, not make them. So I want to make sure my forecasting is as accurate as possible. Um, so as not to lose points. So this is not a bad turnout because my points were accurate 100% last round and accurate 100% this round. The best I could do was to not lose any points. And I got points for the investments and the surplus. Okay, so that's round 2. And again, I would go into my assessment to see how I'm doing in each of the categories, review my charts, review the industry and the competitors, and I can even scroll back to year 1 if I wanted to see year 1 results, then back to year 2, then financials, again review financials, and then round 3 starts, and again I have my information backed up here. My customer expectations have changed, and I'd have to input for year 3. Then going into marketing, again the marketing budgets have increased, so the game keeps going this way until you get to round 6, and then you finish the simulation. Okay, so that's my 30-minute overview of how to sign up for this simulation, join a team, and how to use the practice game and the mechanics of how the simulation works. From this point, you should review the student manual, read this over completely, and sign up, register for the simulation, and start playing some practice games to familiarize yourself with the simulation. Thank you for your time, and I hope you found this helpful and useful. Take care.